Hello everyone, today is our second class, and in our first class we have discussed what is amalgamation and what are its advantages and different activities which are covered in Accounting Standard 14 with regard to amalgamation, absorption and external reconstruction. After that we have learned uh, purchase considerations and what is meant by transferor and transferee company and different ways or methods to calculate purchase consideration. We had completed solving or calculating purchase consideration using net payment method and net asset method. So today is my second class, and first let's see how the amalgamation process is done. So here I have five steps to do amalgamation. The number one is first, board of directors of the company which intends to do amalgamation, they will fix up the terms and conditions of the amalgamation with the transferee company. Okay. So after that, once that terms and conditions is decided, they will take approval from shareholders, because shareholders are true owner of the company. Therefore, their approval is must for all the important decisions with regard to the company. Okay. Thereafter, that scheme of amalgamation, we should comply with the Companies Act and Memorandum of Association of the company. This should be sent to the concerned tribunal for the approval. Okay. Once tribunal's approval is done, then approval of the SEBI is also required. Once SEBI approved the scheme, then they can go ahead and issue shares to the shareholders of the transferor company. So this is a way in which amalgamation process begins, and formalities. These are the formalities that we have to follow according to the company's rule. Okay. Now, uh, in accounting standard number 14, amalgamation falls into two broad categories. Okay, there are two types or forms of amalgamation according to the accounting standard 14. The first one is amalgamation in the nature of merger, and second one is amalgamation in the nature of purchase. Okay, in these two ways, amalgamation is classified according to the accounting standard number 14. So whenever we have any amalgamation problems, first we have to decide whether that amalgamation is in the nature of merger or in the nature of purchase. So there are some conditions which will decide whether it is amalgamation in the nature of merger or in the nature of purchase. Firstly, we will see the conditions that are given for amalgamation in the nature of merger. In this case, there are five conditions as you can see on the screen. First condition says that all the assets and liabilities of the transferor company should become assets and liabilities of the transferor company after amalgamation. Okay, so transferor company in this case do not have choice over assets and liabilities. Okay, they have to take all the assets. They cannot say that I will take some part and I will not take some assets, right? So that discretion is not there. They have, if they want to do amalgamation in the nature of merger, then all the assets and liabilities must be taken over by the transferring company. First condition. Second condition, at least 90% shareholders of the transferor company must become shareholders of the transferring company. Okay, If there are 100 shareholders in the transferor company, then at least 90% of the shareholders should become shareholders of the transferring company after the amalgamation. Here, the important thing is if transferring company or its subsidiaries or their nominees, if they have any shares in the transferring company, those shares should not be included while calculating 90% shareholders. Okay. Number three, the consideration for the transfer of ownership or amalgamation should be paid in should be paid in shares only. Okay. Uh, the forms of amalgamation should be in the form of shares only. However, if there are fractional shares, then for that cash may be paid. It means, for example, if the purchase consideration is rupees 105 and if they are to be issued purchase consideration in the form of shares having rupees 10 as value of one equity share, then 10 equity shares may be issued and that value will be rupees 10, and if one share is costing rupees 10, then it is not possible to issue it for rupees 5, right? So that fractional amount, for that fractional amount, then cash payment may be done. Otherwise, it should be purchase consideration should be done in shares only. Number four, the business of the transferor company should be uh, carried forward by the transferring company. There should be intention to carry forward the same business after amalgamation. Last condition is now whenever in the case of merger, when there is transfer of assets and liabilities, then assets and liabilities will be transferred at book value only. There should not be any discretion like I will take assets and liabilities at uh, lower value or higher value. All these discretions are not there, so it should be transferred at book value only. However, just to ensure uniformity of accounting policies, if there is some differences in accounting policies, then some adjustment can be done. For example, assets or stocks are valued in LIFO basis in transferring company and FIFO basis in transferring company. Then for these accounting policies, adjustment can be done. Otherwise, uh, there should not be any uh, discretionary discretion. Okay, so if these five conditions are satisfied in any amalgamation, then we call it amalgamation in the nature of merger. Now second question arises: what is an amalgamation in the nature of purchase? It is an amalgamation. For an amalgamation in the nature of purchase, uh, if any one of the above conditions which are given in the amalgamation in the nature of merger, even if one condition is not satisfied, then we can call it amalgamation in the nature of purchase. So it is quite easy, right? First, whenever there is a problems with regard to amalgamation, first we have to see whether all the above five conditions are met or not. If all the five conditions are met, then we can call it amalgamation in the nature of merger. Or even if one single condition is not met, then we can call it amalgamation in the nature of purchase. Okay. Now we have first one is about different methods, different classification of amalgamation, right? Different nature of amalgamation. Now in this here I'm showing methods of accounting. Okay, how should we treat amalgamation in the nature of merger or amalgamation in the nature of purchase. So, when we are solving accounting problems, if we have amalgamation in the nature of merger, then we will use pooling of interest method. Okay. Likewise, if we have amalgamation in the nature of purchase, then we will use purchase method. This much we will keep in mind right now. So we got two methods of accounting, which are pooling of interest method and purchase method. Now, how to solve amalgamation problems? First, our job is to identify transferor and transferee companies. Okay. Second work is to decide nature of amalgamation, whether it is in the nature of merger or it is in the nature of purchase, right? Accordingly, we can decide whether we have to use pooling of interest method or purchase method, right? Point number three is we have to calculate purchase consideration as per details provided in the question, right? We already have studied calculating purchase consideration, right? And number four is to close the balance sheet of transferor company. Now, how we will close the balance sheet of transferor company? Okay, we have to pass some journal entries and we have to open some ledger accounts. Okay, in this way we can liquidate transferor companies, right? Number five, we have to pass necessary journal entries to transfer all the assets and liabilities of the transferor companies to transferee company. As we already know that in an amalgamation there is a transfer of assets and liabilities, right? So to transfer those assets and liabilities to the transferee company, we have to pass some journal entries. Okay. After that, we will open new balance sheet of transferee company where assets and liabilities of the transferee company will be added up, and those assets and liabilities will be reflected in the new balance sheet of the transferee company. And once that balance sheet is made, our amalgamation process is complete. Okay. So today we will mainly focus on how to close the balance sheet of transferor company. That means how to close how to dissolve the transferor company, and we have to know how to liquidate the transferor company. Liquidate, dissolve, are all more or less same. Okay. First, we have to shut down the transferor company by transferring its assets and liabilities to transferee company. Now, as I told you, to close down transferor company, first we have to pass journal entries, and there are some important ledger accounts as well. First ledger account is realization account. Realization account is more or less like a profit and loss account. It is the nominal account. Okay. In realization account, we will transfer assets and liabilities. Okay. And from realization account, we will also get whether we are getting profit or loss at the time of dissolving or closing down or liquidating our company. Okay, that is transferor company. Second is transferee company. Transferee company means the company which is going to take your assets and liabilities. That account that ledger account we have to open. Preference shareholders account. Okay, if there is a preference shareholders in your companies, then we have to open an account for them and we have to settle their capital, right? And if there's some payments in the purchase consideration that we will give them, and we have to see we have to close down their account. After that, we will we will have bank account. In bank account, we will see the how much cash is coming and how much cash is going out, and uh, and where all the transactions are recorded. If there is any balance left in bank account, that will be transferred to equity shareholders account, because at the end equity shareholders are true owner of the company. Here an important point to note is that you first you have to create realization account, second transferring company, then preference shareholder account, then account, and last equity shareholders account. Okay, in equity shareholder account, uh, first we have to transfer their capital, reserves, and surpluses, and thereafter on the debit side we have to pay them uh, shares that they received in transferring company, and whatever balance left, that also it will be whatever balance left in bank account, that will be also given to shareholders account. As I already said, realization account is the nominal account, and the main object of preparing realization account is to close the books of accounts of the dissolved firm or transferor firm. Okay, it is open to determine profit or loss on the realization of assets and payment of liabilities. Okay, if there is a profit, that will be transferred to equity shareholders account, or vice versa. That means if there is a loss, loss will be also borne by the equity shareholders account. Now here we will learn how to close the transferor company's balance sheet. Okay, here you all can see balance sheet of transferor company. Okay, here for the explanation purpose I have just highlighted the basic components of balance sheet. Okay, assets, which contains both uh, fixed assets and current assets. Okay, so normally a balance sheet has assets, fictitious assets on the asset side, on the left side, or that is liability sides, equity capital, reserve and surpluses, preference capital, and other liabilities. Okay, both long term and short term. Right now we have to transfer these components from balance sheet. We have to take them out, and we will transfer those components to various ledger accounts in order to close down balance sheet. Okay, so let's see. First, we will just for explanation purpose, I'm trying to show, okay, where these components will go. Okay, but firstly you see a box, green box on the realization account. Okay, there we have a realization account. First we will transfer assets to the debit side of the realization account at book value. Okay, once it's moved from balance sheet to the realization account, nothing is left here. Okay, this here balance sheet in the balance sheet assets value will become zero, because it has moved from balance sheet to realization account. Second thing, liabilities. Liabilities will also be moving from balance sheet to realization account on the credit side. Okay, at book value. So after this, assets and liabilities is taken out from balance sheet, and we don't have assets and liabilities in the balance sheet. Okay, because it is transferred to realization account. It is transferred through passing journal entries that we will discuss how to pass journal entry, that we will discuss after this explanation. Okay, here just keep in mind that where various components of a balance sheet will go. Okay, assets and liabilities are going to realization account. Right, first job is clear. Now second thing, let's first see fictitious assets. Okay, fictitious assets will go to the equity shareholders account on the debit side. Fictitious assets are normally various losses, right? Those losses will be borne by the owner of the business, which is equity shareholders account. Okay. If there is a fictitious asset in the balance sheet, that should be transferred to debit side of equity shareholder account. Okay. Now both the assets and fictitious are taken out from balance sheet. We don't have anything here. Okay. Liabilities is also transferred, right? We have transferred liability to the realization account. Now let's transfer equity capital. Okay. Equity capital obviously belongs to equity shareholder account, so it is transferred to credit side of the equity shareholders along equity share capital. Okay, along with share capital, we have reserve and surplus, which are accumulated profits. These are also transferred to credit side of the equity shareholders account. Right now, we have left with preference capital. Preference capital are also capital of the preference shareholders. So obviously, we will transfer it to the credit side of the preference shareholders account. Right now, after all these transfers, nothing is left in the balance sheet of the transferor company. So in this way, balance sheet is closed down. Okay. After this, we are left with various ledger accounts, right? Then we will study how to close down these ledger accounts as well. And once these ledger accounts are closed, then our job of closing down transferor companies will be over. Okay. First, now after passing these components to various ledger accounts, balance sheet will disappear because nothing is left in the balance sheet. Okay. Now we will learn how to pass various journal entries. Right. I have explained where various components of balance sheet will go. Now let's see in what way journal entries are passed in order to make those movement possible. Okay. Number one talks about transferring assets. I told you, right? Assets will be transferred to realization account. Okay. Here, once asset is for transferring assets, we will pass realization account debit to sundry assets. Okay. Here all the assets are transferred. Okay. Just let's see the points which are given here, special points. Transfer of assets at book value. Number one important work. Okay. And number two, ignore fictitious assets. Okay. As I told you just now, fictitious assets will not be transferred to realization account. It will be transferred to equity shareholders account. Okay. You can see it in the point number 3, right? Now, whenever there are goodwill, patents, or trademark, it should be transferred at book values as well. These all should be shown here. Okay. Number 4, cash or bank. This is an important point. Okay. You all must remember it very clearly. Whenever there is an amalgamation, if cash, okay, I'm talking about cash right now, cash or bank balance. If cash or bank balance are taken over by the transferring company, then you show it here and inside along with other sundry assets. Okay, you have to show it here to bank account or cash account if taken over by this transferring company. If transferring company doesn't take cash or bank, then don't show it here. Only exception is for the cash or bank account. Okay, I hope it is clear with you. I will just explain it once more. If cash or bank account is taken over by the transferring company, show it here. If not taken over, then don't show. Okay. If for remaining assets, there is no problem, or can show it. I hope it is clear now. Second thing is transfer of liabilities. Okay, for liabilities, just write down sundry liabilities account debit to realization account. For example, on the debit side, it can be like creditors account debit, debentures account debit, provision for taxation account debit. Okay, all those liabilities will be transferred to credit side of the realization account. Right now, assets and liabilities are transferred. In the special points, it is given that accumulated profits and any reserves not to be transferred here. Okay, in the realization account, accumulated profits or any other reserves will not be transferred because these are to be transferred to equity shareholders account. Right. Now, number 3, we have explained it already. If there are fictitious assets in the balance sheet, that will be transferred to debit side of the equity shareholder account. Okay, fictitious assets may be profit and loss account debit balances. Okay, or discount or shares or any other accounts may be there. Okay, those if they are fictitious assets, that should be transferred to equity shareholders account on the debit side. Right. Point number 4. For transferring proprietors fund, it means various capitals. Okay. First, equity shareholders capital account debit, then a profit and loss account debit, or any other reserve. All these accounts of which are in the balance sheet should be transferred to credit side of the equity shareholders account. Right. Okay. Second thing is, if there is a preferred share capital, then his capital will also be transferred to equity shareholders account. Why we are transferring capitals reserved to the equity shareholders or preferred shareholders account? Because now time has come to liquidate and close down the business. So because of that, now we are transferring capitals and reserves to their account to make final settlement of the account. Point number 5 is for purchase consideration due. Since we have transferred assets and liabilities to the transferor company, now we should get something in return, right? When purchase consideration becomes due, right, then transaction will be transferor company account debit to realization account. It will reflect in credit side of the realization account, and amount will be that of the purchase consideration amount. Next transaction is for when we receive purchase consideration. We already know that it can be in different forms, right? If we can get equity shares, preference shares, bank account, cash payment, debentures in transferor company, right? All those different forms of purchase consideration will be debited, and it will be debited here, and on the credit side it will be to transferor company. Okay. Now point number 7. If there are some assets which are not taken over by the transferor company, then those assets will be sold by the transferor company. Then the transaction will be bank account debit to realization account, and on the amount column, amount will be value that we realize from selling that asset. Okay. Point number 9. Sometimes some liabilities are not taken over as well. So if transferor company doesn't take that liability, then we have to make or settle that liabilities, and for paying such liabilities we have to pass realization account debit to bank account, because this is our expenses, right? Then in the amount column you show actual payment. Okay, liabilities can be settled at a discount as well. So whatever value that is given in the question, you put that value on the column, amount column. Okay. Point number 10. Payment of realization expenses by transferor company. If there is realization expenses paid by the transferor company, then it is an expenses. Therefore, you have to pass a journal entry in this manner. Realization account debit to bank account, because money is going out and it is your expenses, so realization account will be debited, right? If there are sometimes transferring company may pay realization expenses of transferring company, if that is provided in the question, then you don't need to make any journal entry, right? Point number 11, for payment to preference shareholders. Okay, since if we have preference shareholders, then we have to make payments to them, right? And that payments we will get from various forms of purchase consideration, right? There you will get how much preference, how much shares preferential holders will get in the transferring company, right? They can get cash payment, they can get debentures in new company, they can get equity shares, they can also get preference shares in new company. Okay, so transaction will be preference shareholders account debit to all the different forms of purchase consideration that they get from transferring company, right? In number 12, if preference shareholders are paid more than their capital. Okay, first we have to know is how much preference share capital are there. Let's assume if total value of preference shares is rupees 100, and if they are getting 110 as purchase consideration, that means they got rupees 10 more than their capital, right? In that case, rupees 10 is loss for you, and you have to pass this journal entry, realization account debit to preferential holder account, and on the amount side we have to mention rupees 10, because you have preferential holders are paid rupees 10 more than their capital, right? That is loss for you. And there are occasions where preferential holders value is rupees, if preferential holders capital is rupees 100 and they are paid rupees 80 only. In that case, preferential holders are paid or settled below their capital amount, right? If they are settled in rupees 80, then rupees 20 is your profit. In that case, you have to pass just a reverse entry. Okay, it will be like preference shareholders account debit to realization account, because it is profit for you, right? In second example, on the amount column, you have to write rupees 20. That is your profit. So whenever you close preference shareholder account, first you see how much their capital is, and it will be on the credit side of the preference shareholders account, and on the debit side you see how much they are getting. Then you can make it out whether they are getting more or less. If they are getting more, it's our loss. Then pass this transaction as mentioned in the journal entry number 12. If they are paid less, then we have to simply do the reverse entry. Okay, if they are paid at par with their capital, then we don't need to pass any entry. Their account will be equal, and we don't need to pass any entry. We can simply close that account. Number 13, for selling shares received from transferring company. Okay, we already know that we receive shares in new company, right? As a purchase consideration. Sometimes in the questions you will find that transferor company will sell those shares in the market. Okay, if once you sell, what will come to you? Money will come to you, right? Then you have to debit bank account. Okay, and two shares, and you will get those money by selling shares of transferring company, right? So journal entry will be bank account debit to shares in transferring company. Now here you can see that with profit, then credit realization account. If there is a loss on sale of the shares, then you debit realization account. Okay, this you keep in mind. Point number 14. Now we will close the realization account, and if there's a credit side is more than debit side, then we have profits, and profits will be transferred to equity shareholders account, because equity shareholders are owner of the company. If there's a loss, then it will be transferred to equity shareholders as well. Okay. Last point. Now for payment to equity shareholders. Our last point is always payment to equity shareholders account. Okay. Once their accounts are settled, then all the church account will be closed as well, and we have to our work or our process to close down the transferor company will be over. Okay. For payment to equity shareholders, we have to show equity shareholder account debit to shares in transferring company. That is whatever shares that they got from transferring company, and to bank account. To bank account means whatever money that is left in the bank account will be paid to the equity shareholders, and both the debit and credit side of the equity shareholders will be tallied, and equity shareholders account will be closed. Okay. Here an important thing is bank account. When we are doing liquidation work, there are many bank related transactions. So there will be lots of debited and credit in a bank account, and at the end, when all the transactions are over, we have to find out the money which is left in the bank account. Okay, whatever money that is left in the bank account, that should be transferred to equity shareholders, and it should reflect in here. Okay, here it should reflect, and because this is an important figure, the amount which is shown here is an important figure to complete or to close down equity shareholders account. It's an important thing. Okay, I hope you all are familiar with this particular balance sheet. We have already used this question to find out purchase consideration and ways to discharge purchase consideration, right? Now today I am giving one homework to all of you. The aim of the main work which you all have to do is to close down transmitter company. Okay, in this case transmitter company is A Limited, right? You all have to pass journal entries as I explained to all of you. Okay, now we know already, right? Assets, right? 1, 2, 3, 4, right? This is fictitious assets. This is bank account. Okay, assets will be transferred to debit side of realization account. This will be transferred to debit side of equity shareholder account, and we have two liabilities. It will be transferred to credit side of realization account. This equity shares will be transferred to credit side of equity shareholders account. Preference shares having 2 lakh value will be credit to the preference shareholders account, right? In this way, we have to take out all these balance sheet items to the various ledger account. Then after that, we will close down each ledger account, and finally we will close down bank account, where whatever is the balance amount that will be transferred to equity shareholder account, and equity shareholder account will be closed. Okay, so I hope you all will do this. We all can do this without much problem, and uh, this is homework for all of you. I'm giving 2 days to do this homework, and you all try it. And after trying to solve this question, just send me the answer to me through WhatsApp. Okay, it is not compulsory. You try to solve it, and if possible, send to me. That will be very good because I will give feedback to all of you in my next class. It's important to understand where we are going wrong. Okay, so if possible, send to me, or if not possible, then try to solve it and keep your answer along with you, so that in my next class, whenever I'm explaining it, you can correct your mistakes, right? Once you identify where you are making mistakes, then later on there won't be repetition of those mistakes, and you will be in a better position to solve this kind of problems at the time of exam. Okay, so I hope the homework is clear with all of you. Passing journal entries and various ledger accounts as given in the questions, like realization account, preference shareholder account, transferee company stat limited, bank account, and equity shareholder account. Okay, all are requested to close ledger accounts systematically. Okay, first open realization account, preference shareholders account, then transferee, thereafter bank account, and finally equity shareholder. Okay, in this way you open and close various ledger accounts, and then it will be easier for you. Okay, best of luck. So I will again come in my next class. Till then, take care and stay safe.